Hey everyone, and welcome back to CoinTalk Podcast on YouTube. We're going deep today into something pretty interesting.
Yeah, it's a development that has a lot of people talking, that's for sure.
For sure. So we're talking about Bloomberg and their brand new investment indices. They're called the BBIG and the BBUG.
And the big deal is that they're combining Bitcoin and gold. Two assets that most people think of as being, well, pretty different.
Totally. So if you're watching this on YouTube and this is the kind of stuff that gets you going, don't forget to subscribe to CoinTalk Podcast and give this video a thumbs up. We love to see it. Okay, so let's break down these new indices. First up, the BBIG index. It's actually pretty straightforward, just a 50-50 split between Bitcoin and gold.
Yeah, but you know that 50-50 split, it's kind of a big deal. Bloomberg's basically saying that they see Bitcoin and gold as equals. At least when it comes to this index, it's about potential and risk.
I see what you mean. It's like a signal that they're taking Bitcoin seriously, right?
Oh, absolutely. This isn't like some small startup messing around with crypto. This is Bloomberg, like a giant of Wall Street. They're putting their name behind the idea that Bitcoin belongs right alongside gold in a portfolio.
Yeah. Okay, so then there's the BBUG index. This one's a little more, well, a little different.
Yeah, so it's Bitcoin and gold again, but they're adding a little bit of the US dollar into the mix.
Okay, so that's for people who maybe aren't as comfortable with Bitcoin's ups and downs.
You got it. The US dollar is supposed to make things a bit smoother, less volatility.
Makes sense. And here's something else that's cool. You can actually change the amounts of each asset in the index.
Right. It's not stuck at 50-50 or whatever. You can customize it. So if you're really into Bitcoin, you can have more Bitcoin. If you're more cautious, you can have more gold or more US dollars.
Gotcha. Okay, so now that we know what these indices are, let's talk about why Bloomberg would even create them in the first place. Like, what's the logic behind mixing Bitcoin and gold?
It's all about diversification, right?
Yes.
You want a portfolio that can handle different situations. So you've got Bitcoin, which, has the potential to really take off. And then you've got gold, which is seen as a safe bet when things are uncertain.
Oh, so you're saying it's like the best of both worlds.
Exactly. You get those big potential gains from Bitcoin, but you've also got gold there to cushion the blow if things go south. And hey, if you're liking this discussion so far, make sure you hit that subscribe button on CoinTalk Podcast on YouTube.
Now let's take a step back for a minute. Both Bitcoin and gold hit record highs in 2024. What do you make of that?
Well, I think it shows that more and more investors are starting to see Bitcoin and gold as partners, not rivals.
Instead of that old Bitcoin versus gold story.
Right. Now it's more like Bitcoin and gold. They both have their strengths, and they can both be part of a strong portfolio.
And one of the big arguments for combining them is that they don't really move together, price-wise.
Exactly. They have almost zero correlation. But the interesting thing is they've both gone up in value over time, even though they're doing their own thing.
So it could be like one's going up while the other's staying flat, or vice versa. It kind of balances things out, right?
Exactly. But there's another layer to this that we need to talk about.
Okay, now you've got me intrigued. What is it?
It's the idea that maybe, just maybe, Bitcoin isn't just doing its own thing. Maybe it's actually following gold's lead in a way, but over a longer period of time.
Oh, wow. Okay, now we're getting into some really interesting stuff.
Right, we're going to dig into this whole catch-up theory in the next part of our deep dive here on CoinTalk Podcast. So if you haven't already, hit that subscribe button and stay tuned for more.
We'll be right back. Just kidding, we're not going anywhere. We'll jump right back into this in just a second.
So, we've been talking about these indices and all that, but let's think about what it means for you.
Yeah, what's the takeaway for someone who's watching this?
I mean, even if you don't go out and invest in these specific indices, there's a bigger picture here.
Right, it's not just about Bloomberg or these products. It's about, like, where Bitcoin fits into the whole financial system, right?
Yeah, exactly. It's like a sign that the big players, the institutions, they're starting to take Bitcoin seriously.
And if more of those institutions get involved, doesn't that mean Bitcoin could become more, more stable?
Potentially, yeah. I mean, think about it. When these big institutions come into a market, they bring a lot of stability. They're not as likely to, panic and sell at the first sign of trouble.
And that could make Bitcoin more appealing to, like, regular investors who maybe have been a little scared of it before.
Yeah, for sure. And the more investors we have, the more pressure there is for regulations to catch up, for the infrastructure to improve, and that just makes everything, more legitimate.
So it's like these indices could be the start of a whole new phase for Bitcoin.
Maybe, yeah. One where it's not just the early adopters, the tech people who are into it. It's like the whole financial world is starting to pay attention.
Okay, so It sounds like this is also changing how we think about diversification, right?
Yeah.
It used to be just stocks, bonds, real estate, that kind of thing.
Right. But now we've got these alternative assets like crypto and precious metals becoming part of the mix.
And these indices make it, easier for people to get involved. They don't have to go out and buy Bitcoin directly or figure out how to store gold.
Yeah, exactly. It's like it lowers the barrier to entry.
But, I'm sure there are some people who are watching this and thinking, this is just Wall Street being Wall Street.
Yeah.
Like they're just trying to make money off of the whole crypto thing.
Yeah, and that's a fair point. It's always good to be skeptical, especially when it comes to investments.
We're definitely not saying these are like guaranteed to make you rich or anything.
Yeah.
If you're watching CoinTalk Podcast on YouTube, please do your own research. Don't invest more than you can afford to lose.
Exactly. But even with all that said, I think these indices are a sign that things are changing. Bitcoin is becoming more and more well accepted.
Like, are we at a point where it's becoming a real asset class?
It's hard to say for sure, but it's definitely a question worth thinking about,
Okay, so remember that catch-up theory we were talking about? The idea that Bitcoin's price might actually be following gold's lead, but in a slower way.
Right. It's not something you'd notice day to day, but over time, the argument is that Bitcoin kind of adjusts to where gold is.
So it's like there's a connection there, even if it's not obvious right away.
Yeah, and if that's true, it means that things that affect the price of gold, they could also affect the price of Bitcoin eventually.
It's like we have to start thinking about them together, not as separate things.
Right, and we'd love to hear what you think about this. If you're watching this on CoinTalk Podcast, leave a comment. Do you think this catch-up theory makes sense?
It's a learning process for all of us, and we'd love to hear different perspectives.
And that's what's so cool about crypto, right? It's always making us rethink how things work.
Totally. And we're here on CoinTalk Podcast to help you navigate it all, but we're not done yet. There's one more piece to this puzzle we need to look at. All right, so we've covered a lot of ground here. We talked about what these Bloomberg indices are, why they exist, and what they could mean for Bitcoin.
Yeah, but there's one more question we got to tackle.
Okay, hit me with it.
What about the long-term consequences? Not just for Bitcoin, but for, for gold, for the whole investment landscape.
Ooh, okay, so we're looking into the crystal ball now. What do you see?
Well, some analysts are saying that these indices could, really accelerate Bitcoin's adoption.
Because it gives those big institutions an easier way to get involved.
Yeah.
The ones that have been hesitant about crypto until now.
Exactly. We're talking pension funds, insurance companies, even countries with their sovereign wealth funds. They haven't really touched Bitcoin before.
But now they got these indices. It's like a more familiar way to test the waters.
Right. And if those institutions start pouring money into these indices, it could be huge for the crypto market. It could bring in tons of capital, which could lead to more stable prices, a more mature ecosystem.
And then that could lead to even more investment, more regulation. It's like this whole cycle. Right?
Yeah, like a snowball effect. Bitcoin becomes more mainstream, more accepted.
Okay, but what about gold? What happens to gold in all of this?
Well, that's the big question. Some people think that as Bitcoin becomes more popular, it could actually start to replace gold as that go-to safe haven asset.
So instead of people running to gold when they're worried, they might start buying Bitcoin instead.
Exactly. And that could mean lower demand for gold, which could, push prices down.
But we got to be real. This is just one possibility, right?
Yeah.
Nobody knows for sure what's going to happen.
Oh, for sure. There are so many factors at play. It's impossible to predict the future with 100% certainty.
But that's what makes this whole conversation so interesting. It's like we're watching this whole new financial world take shape.
Yeah.
And we don't know exactly where it's going.
And it's a reminder that things can change quickly. We got to stay informed, stay curious.
And that's what we're all about here on CoinTalk Podcast, right?
Yeah.
Helping you guys make sense of all this crazy stuff. So to wrap things up, what are the big takeaways for our listeners today?
Well, I think the biggest one is just to keep learning. The more you know about Bitcoin, about gold, about investing in general, the better decisions you can make.
And don't be afraid to, challenge your own assumptions. Things are changing so fast in finance and crypto, you got to be willing to adapt.
And of course, do your research, talk to people you trust, don't invest more than you can afford to lose.
If you're looking for more insights and analysis, make sure you subscribe to CoinTalk Podcast on YouTube. We're here to help you navigate the wild world of crypto and finance. Thanks for joining us for this deep dive, and we'll see you next time.